welcome to Bazaar Morning Call. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy, and with me is Lata Venkatesh and Nigel D'Souza. And thanks for being with us early this morning. Well, we begin the day. Actually, it's been a good start to 2023. No two ways about that. The Nifty yesterday recovered to that, all the way to that 18,200 mark or thereabouts. In fact, from the lows that we saw in December, the market is now up almost 400 points. Remember, the low that we hit on 23rd December was around 17,800. So in that context, there's been a good pullback that the market has seen. The Nifty has in fact found a bit of support at that 100-day moving average of 17,878. Now, we have no cues from most global markets. The US market will open later tonight after a long weekend. The flows are also on the muted side. In fact, most Asian markets were shut yesterday as well. So FI has barely sold about 200 crores. DI has bought 740 odd crores. I'm watching for a couple of pockets this morning. The metal space had good long additions over there, so just keep an eye out on that. Tata Steel, SAIL, Hindalco. I guess it's the the reopening trade in China, and that's really aiding the sentiment over there. And let's see. For today, the SGX Nifty should also come up for you on the screen. The last tick indicated that around this level of 18,200 or so is where the market might open, about a 40-50 point cut, but nothing alarming. The pullback has been pretty decent so far, Lata.
I'm not that impressed by the pullback simply because nobody was trading yesterday. You could take any positions and wind them back today. Today is the real test. So I would think that Monday the mice were at play because the cat was away. And the true test for the market will be Tuesday. And Tuesday, we, as you pointed out, start with a bit of headwinds. The Asian markets are not looking good at all. Korea and Australia are starting, I mean, these are big markets. That's why I'm picking those. They're starting nearly 2% lower. Korea, I guess, 1.7% or thereabouts. And they're all reacting to terrible Chinese PMI. You must expect that. The economy contracted because of all the waves of COVID. Likewise, we've got small trades in the US pre-market. I mean, they're still asleep, still enjoying the 3-day holiday, but the little bit of trades that you have on Wall Street futures, Dow and NASDAQ are slightly negative. So my sense is that the markets, both Indian and global, will not be too ebullient, too cheerful today because the US FOMC minutes come out on Wednesday. So you want to be a little cautious. You must be prepared for a possible more than expected hawkishness in the FOMC language. And then, of course, Friday, there's also non-farm payroll. But at least till Wednesday, the market will hold on to its horses. So that, for me, is degrees of caution. And that explains why you're seeing the SGX index in the red. But what might be positive is that we're getting the first December data. The banks have all announced, and although they're all small banks, they are very clearly showing the trend that things are good. The CSB Bank, Karnataka Bank, South Indian Bank, even to some extent MMFSL are showing that the economy is greedy for loans. Loan growth has been excellent. So it's not just these three banks, but also a thumbs up for the economy. So I would count that as good news. But, the market is going to look over its shoulder at the US futures.
Well, I'm just looking at the markets, and yesterday was a good start, actually. You want to slice it any which ways. Participation was low. The party started well, though. Maybe the number of people at the party weren't that much. But it's a good start, 0.5% gain, and we ended at the high point of the day. That was something that was good. The Nifty Bank on a closing basis conquered the 20-day MA as well, so I like that. And the breadth of the market was pretty good. So put all of that together, it was a good start to trade. What are the cues we're looking at? Well, the FIs, they've added some short positions. They added close to around 5,000 short contracts odd. And now if you look at it in the last few days, they've gone from being net long to being net short on the index. And that's not such a bad thing because the short positioning is at around 53% odd. The other positive coming in from the FIs is that they're writing puts, telling you that maybe they're trying to push up the base from the markets. Maybe we don't go back to around the 17,800, 17,850 odd, because they were writing puts yesterday. 70,000 put contracts were written in the ratio of around 2:1. And a couple of active strikes. The 18,000 put, the 18,100 put, premium between 30 to around 50 rupees gives you a sense that 18,050 could be, a bit of a buy zone, and that could be the near-term support that we're looking at on the Nifty. And let's extrapolate the resistance zone then. So support we have closer to around 18,000, 18,050. But the 20 to the 50 DMA, which the levels are up for you on the screen, that is going to be a resistance zone. 18,300, 18,350, that's going to be a resistance zone for the bulls to get past. Now, since there was put writing, the Nifty Bank as well, normally we don't have very, very active strikes out there. But one of the strikes is very active. The 43,200 put, the open interest was up by more than 10 lakh shares, and the premium is at around 260 odd. So you just extrapolate that and you get your support zone. That's between the 20 and the 50 DMA. So the Nifty, we have a resistance zone between the 20 and the 50 DMA, while on the Nifty Bank, the 20 to around the 50 DMA will be a bit of a support zone. The SGX 50 is suggesting a bit of a pullback. I think if you get a deeper gash, maybe around 80 to 90 point downtick, maybe risk reward will favor you. Though volumes are expected to be relatively lower. Maybe in the next couple of days you'll see a pickup, but let's see how this goes. What else, Sonia? Okay,
well, lots to talk about, right? The Nifty Metal Index, by the way, hit a new high yesterday, and you were talking about the upgrades that came through for a lot of these companies, Tata Steel, JSW Steel, etc. So we'll keep our eye out on that entire pocket today. And of course, as we head into the earnings season, we have TCS coming up on Monday. So ahead of that, the IT stocks will also be in focus. But before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Rana Gupta of Manulife Investment will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Dipan Mehta. He'll be joining in just a while as well. But first up on the equities front, GV Giri of IIFL Institutional Equities says in 2023, India's economy should continue to exhibit strength based on many macro indicators, including strong government revenue collections, low corporate and bank leverage, and stable external positions. He said this should not only insulate India to some extent from a global slowdown that sharp interest rate increases in Western economies will cause, but also prevent Nifty multiple premium compression, though the index itself may give only modest returns. He says they favor strong idiosyncratic earnings growth at reasonable prices. IIFL top picks include Bharti Airtel, SBI Life actually, Interglobe, NTPC, Bank of Baroda and Sun Pharma, while Wipro's, Divi's, Shree Cement, IRCTC and Aarti Industries are sell calls for them.
Okay, now we go over to money market views, and this one comes from Bhaskar Panda of HDFC Bank. He says in 2023, we could see predictable movements in interest rates, but geopolitical scenario remains volatile. He says the dollar index has been hovering near crucial support levels while oil remains elevated in an Indian market. He says the new year has brought in hopes of stabilization in dollar rupee after almost an 11% depreciation in 2022. He expects the dollar rupee pair to consolidate in a range of 82.5 to 82.80 for the day.
Okay, and on the bonds, Bhaskar Panda says Indian bond market yields rallied by a few basis points, especially due to announcements of higher than expected state borrowings. He still expects more range-bound movement as of now. He says the 10-year benchmark bond yield is likely to hover in a range of 7.3 to 7.35% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at Mahindra Financial, ONGC, Hindustan Zinc, PSP Projects, South Indian Bank, Karnataka Bank, and CSP Bank. They are stocks on the back of positive news flow. On the flip side, you have Zomato, Reliance, and Oil India. They are stocks that could react to the negative news flow and could open up in the red.
Just a minute ago, I spoke about the Chinese PMI, what they call factory activity, and that has shrunk not just for the month of December. It's the third straight month of shrinking of the economy. Sharpest pace of shrinkage that we have seen in 3 years because of COVID infections rising in the country. And this is despite the government easing its zero COVID policy, or probably because of that. Let's listen to a China expert, Ishwar Prasad of Cornell University, on what he had to say about the economy outlook and the services sector outlook.
Certainly in the short run, there is going to be a little more destruction in terms of the services sector in particular, but more broadly in terms of industrial activity, in terms of consumption, and most major indicators of economic activity. It's going to take a little while for China, much like the rest of the world, to learn to live with COVID. And I think the answer to how significant this disruption is going to be in the short run largely depends on how effective the government is in terms of ramping up the vaccination policy and in terms of getting people vaccinated so that the negative effects of this sort of dislocation can be minimized. But certainly in the short run, which I mean the first quarter of 2023, I think it's going to be rough riding. But I think beyond that, things are going to stabilize. The real challenge for the Chinese government is trying to revive both consumer and business confidence because unless consumers feel comfortable spending again, even when the restrictions are reduced, and unless the private sector, businesses in the private sector feel comfortable about investing again, it's going to be very difficult for China to get the sort of employment growth and productivity growth it needs to sustain higher growth.
Okay, that's a big talking point globally, China reopening and the kind of impact that it would have both on China, how fast they can reopen, how well they can progress economically, and what happens with other emerging markets. Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment, joins us now. Rana, good morning. Happy New Year to you, and thanks for joining in. Most, equity strategists believe that now that China is going to reopen or has reopened, a lot of money could perhaps move into China versus other markets like India. Is that your thought as well, or do you think it could take some time for China to stabilize? And what is the preference now for 2023?
Okay, good morning, and a happy new year to all your viewers. We do think that China opening up will mean that some of the monies that will get allocated to China, but consider a scenario where China did not open up and US is raising interest rates and real rates are turning positive in US. That would have been, I think, financial conditions would have tightened much more. China opening up kind of offsets that. So in 2023, perhaps we will have a better emerging market growth outlook than the developed world. And that itself will mean that capital allocated towards the emerging markets can be higher. Yes, some of it will go to China over India. But we do think that overall the environment for the emerging markets looks pretty good with the China reopening that's coming through.
Okay. Good morning, Rana. Good to have you with us, and hope 2023 is a fabulous one for you.
Thank you.
But I want to ask you about India. At an index level last year at 4%, we may have outperformed. But for an Indian investor, that was not much, and certainly not if he was invested in mid caps and small caps. What might 23 hold?
Sure. I think if you look at the market overall return 4 or 5%, that's of course I think not enough for, let's say, an Indian investor who has a much higher risk, expectation. But I think Lata, we need to look a little deeper the sector indexes. If you exclude IT, which I think was down 25%, and pharma, which I think was around 10%, all other indexes were up. Sector indexes were up 15 to 20%, with metals under 25%. So if someone just avoided the IT and pharma or had lower exposure, did much better. Yes, the mid-cap index and the small-cap index did a bit worse than expected, but that's okay because 2022 was a year where we had COVID and the war and the rates rise and so on and so forth. But we think that all that is now behind us. Maybe a bit of earning downgrades from a global perspective in the US and some in India are pending. But going forward, we look towards all the headwinds that faced us in 2022 kind of settling down. And overall, if you look at, again, the emerging market context, we do think the countries which are where the promise of savings increasing, like fiscal deficit is in control, current account deficit not too high, I think those countries are in a favorable position to get global allocation of capital, and that should mean that the overall outlook should be much better than 2022. Having said that, at the overall market level, I think the returns might still be in high single digits or lower double digits. It will again come down to sector and stock selection and outperforming the market to generate that healthy returns.
You're suggesting the next question yourself. What should be those sectors?
Right. So I think, we have been bullish on the banks, and given the way the rates have gone up and given the credit strong demand that you were still alluding to just before, we remain positive on the larger banks. Even within the financial space, there are ways to play it. For example, the life insurance. I think the valuation is quite attractive, and they're also an indirect beneficiary of higher rates. So I think that is one financial sector that we like. We also like the capital goods sector. In the capital goods sector, of course, we are making a several change vis-a-vis 2022. In 2022, we were also overweight some of the capital goods companies which has global exports to the developed markets. This year, I think we will be more comfortable with buying capital goods companies who are India specific and or Asia emerging market specific.
All right. Hi, Rana. Morning. Rana, I wanted to. All right,
Yeah.
Rana. I wanted to ask you about the earnings number that you put out. That's still a risk, right? Global earnings have not really adjusted, and even in India, we have not seen any big pullback in earnings. We're still working with that elevated earnings projections. Don't you see that as a bit of a risk for equities?
No, of course, I think earnings still have some downside risk. But the thing is that earnings and the PE will not bottom at the same time. In 2022, the PEs have corrected quite a bit, and the earnings did not correct as much because the nominal growth was so high. So the earning correction did not happen, but the PEs already corrected. As you going forward in 2023, you see some bit of earning correction on, but we do think the correction will be lower than people feared because nominal growth is still going to be high. You will have some support coming through from the multiples, particularly in the second half of the year when the outlook kind of gets towards that when will Fed start reducing rates. So our view is that by end of this year, you will have the rate reducing cycle beginning. But I think as you know, the stock market discounts few months in advance. So this year we are looking for earning downgrades, but less than the market's fear, but some support from multiples overall.
Okay, so coming back to sectors, then you said that life insurance companies, the valuations are looking good to you, and you also like manufacturing, specifically capital goods.
Yeah.
What else attracts you in a market like India?
Sure. The other sector that I was referring to, we have been bullish on the urban consumption last year because of pent-up demand and the valuation of attractive reopening trade was there. I do think they're going to do well, but increasingly what we're looking towards too, that when is the time to buy more diversified, more broad-based India consumption, like a rural India part of consumption. They have not done well, but I think there are some signs that the growth is there is picking up. So, for example, something like a two-wheeler, which we have avoided it for quite a long time, I think something that can be looked into. Consumer staples companies, I think although overall the index level, they have done all right, but I think there the valuations are corrected and the expectations are low. So the bar to beat the numbers are not that high. So I think this switch from urban to rural consumption is something that we have to keep watching in this year.
Okay. Now, the classic dilemma, as you pointed out, if at an index level we have to settle for high single digits, the interest rates are, springing up. Even the small savings rates have been increased, and banks are, SBI is giving 7%. So you think that may detract?
Yes, I think some of the capital flows from let's say even in India, I mean, we spoke about global allocation, but some of the capital flows from the market to fixed deposits and all those things will happen. But I think this year, for making good returns, again, the sector and stocks will be very specific. And we do think the sectors that we like, there we're going to get much better returns than 6 or 7% that's given by the term deposits of different banks. And also, we are, we all know this, that the taxation treatments on equities are much more favorable. So overall, total return perspective, I think is still going to be good. Even if I think you look at 2023, I would say that the broader markets and particular sectors that we mentioned, and let's say the mid cap and some of the small cap stocks there represent much better opportunities.
Okay, Rana, we will let you go on that note. Thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your thoughts. That is Manulife Investment Management. They like a couple of sectors in India. They like life insurance companies. They're looking at the banks as well. Of course, that remains their top favorite. They like urban consumption as well as capital goods companies in India this year. Let's slip into a quick break. On the other side, our list of top stocks is lined up with our research team. Do stay tuned in.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, our research team is standing by to drill it down to the stock-specific action with CNBC TV18's top list of stocks for the day. Morning, guys. Abhishek, you go first. A lot of updates we've got, overnight. Tell us about Mahindra & Mahindra Financial.
Well, it looks like they have had a good run in Q3 FY23, given the fact that disbursals have been pretty strong, but it's not translating into meaningful AUM growth till yet. However, asset quality has, improved, so which is a positive sign. So to begin with, disbursals for the month of December was around 4,650 crore, up about 3.3% month on month. This also shows that for the quarter, they have had a disbursals of 14,400 crore, which is up 82.3% YOY and about 22.7% sequentially. The business asset or the AUM has grown by just 4.3% quarter on quarter and about 0.9% on a month-on-month basis. Remember that in the previous quarter, they have had an AUM growth of nearly 9% or more on a sequential basis. So gross NPA ratio, that's declined sharply to 6.2%, which compares to about 7% in the previous month and about 6.7% at the end of Q2 FY23. Collection efficiency has improved. The December ending has seen collection efficiency of 98% when compared to 96% in the month of November and about 98% same time in September. So overall, good set of numbers in terms of disbursements and collection efficiency coming in for Mahindra & Mahindra Financial. Back to you.
Okay, that sounds good, Abhishek. Thanks for that. M&M has a tendency to have rather volatile numbers. So that's why you have 88 and 2 and stuff like that, because the year ago numbers were tough. Let's get to Zomato. Big things happening there. Another exit, Mangalam?
Exit, in fact, the fourth big exit that we've seen in Zomato in the last 2 or 3 months itself. And this one's a big one because it's the chief technology officer and co-founder Gunjan Patidar, who's resigned. He was one of the first few employees of Zomato and was, important from a company's building of their core tech systems perspective. So this is important also because the recent exits that we had of co-founder Mohit Gupta, the company is not looking for a successor for him. New Initiatives head Rahul Ganju and Intercity Legends head Siddharth Jawar. All of these guys handle verticals of the companies which now are under the current leadership itself. For instance, Deepinder Goyal is now directly leading food delivery. Albinder Dhinsa is, leading Blinkit, and Hyperpure, which is led by Rakesh Ranjan. So the others were, were leading verticals which weren't as important to the company. But the CTO resigning is something that the street may not like. See some red on that stock. However, for companies like this, since he's the first few employees, and they've mentioned as well that they do have a strong succession plan and systems, so nothing immediately worrying for them. But the fact that over the last 3 months, there have been 4 big exits is something that will not, go down well with the street.
Oh, absolutely. And the stock is down about 15% in the last 1 month as well. Thanks a lot, Mangalam, for that. Well, Sonal is with us to talk about ONGC and the latest on the windfall tax. Sonal, over to you.
Good morning, Sonia. Let me start with ONGC in particular because their rig Sagar Samrat has started oil and gas production in the Arabian Sea, and they have given the numbers as well. This rig will handle up to 20,000 barrels per day of crude oil, and they also say that they are expected to add 6,000 barrels per day of oil to ONGC's production in the coming days. In terms of gas, they say maximum export gas capacity is 2.36 million cubic meters per day. So that is definitely a positive news. On the flip side, we have the windfall tax revision, and this time around it is on the higher side. On crude petroleum, it has been increased to 2,100 rupees per ton versus 1,700 rupees. Export duty on diesel has been increased as well to 6.5 rupees per litre versus 5 rupees per litre. Export duty on ETF has seen a sharp hike. So here it is at 4.5 rupees per litre versus 1.5 rupees per litre. Duty on petrol continues to be nil, and this is on the back of the increase in crude prices that we saw in last couple of days. But yes, this is something that could see the likes of Oil India in the red. But for ONGC, the news that I spoke about earlier is a positive.
Okay, all right. Thanks a lot for that, Sonal. Well, let's focus on a couple of other stocks. PSP projects, large order is what they've got. They emerge as the lowest bidder for a government project worth around 1,350 crores. That's come in, for the construction of a state-of-the-art high-rise office building in Surat itself from the municipal corporation out there. So that stock should open up well in the green, going by the size of the order. Next up, we have Hindustan Zinc. Remember, the float in the market is very, very minimal. They've come out with their operational update. It doesn't move the needle too much. But, out there, the mined metal is up by close to 100%. The silver integrated sales actually is a little lower. It's down by close to around 7% at around 161 tons. That's a little bit disappointing. But there is expectation that silver prices could move up. So we're going with green given the kind of buoyant sentiment we have on metals. So keep an eye out on that one as well. But back to Abhishek. Abhishek, you're tracking a whole host of banks They came out with their quarterly update. Run us through the list.
Nigel, the key thing amongst all the banks is there is sharp improvement in CD ratio, which in a rising interest rate scenario augurs well for net interest margin to either remain healthy or improve on a sequential basis. So let's begin with CSB Bank. They are taking the sheen away from NBFCs on the gold loan portfolio. So overall, the deposit growth is about 19% YOY and about 8% sequentially. The CASA ratio has dipped sharply to 31.4% versus 34.3% in the previous quarter. Over here, the CASA growth in absolute value has largely been less than 1% quarter on quarter. However, other deposits have grown higher, so you are seeing a dip in CASA ratio. Loan growth pretty strong, 25.7% YOY and about 5.6% sequentially. In this, the gold portfolio has grown robustly at about 50.8% YOY and 9.3% sequentially, which has meant that the overall gold loan share in the overall loans is about 47.05% when compared to 39.2% in the same quarter last year and about 45.5% in the previous quarter. X of gold loans, the loan growth is about 9.55% YOY and about 2.5% sequentially. Coming on to Karnataka Bank, that's also seen an improvement in their CD ratio, which is credit deposit ratio. The deposit momentum was weak over here, up about 7.9% YOY and about 3.6% sequentially. The CASA ratio has also seen a decline on a sequential basis. However, loan growth is pretty robust on a sequential basis, growing by about 4.4%, which has meant that the credit deposit ratio is at 75.25% when compared to 74.7% in the previous quarter. Coming on to South Indian Bank, the deposit growth is weak. However, improvement in CD ratio does mean that they can see an uptick in the net interest margin. Deposits grew by just 2.7% YOY and about 2.5% sequentially. The CASA ratio has seen a dip to 33.84% versus 34.5% in the previous quarter. Loan growth pretty healthy, 18.5% YOY and about 3.2% sequentially. So they have seen an uptick in their CD ratio as well. Back to you.
All right, thanks a lot for that. Very helpful there. Here's a quick recap of our top stocks. Stocks with positive news flow today. There's M&M Financial, ONGC, Hindustan Zinc, PSP Projects, South Indian Bank, Karnataka Bank and CSB Bank. While stocks with negative news flow, there's Zomato, Reliance Industries and Oil India. But let's go across. Sure.
No, it's okay. I was just going to introduce Manisha Gupta. Manisha, tell us which commodity we should watch out for and whether the strong trend of yesterday continues.
Thank you for that, Lata. Well, I'll start with crude oil prices. And, officially yesterday was the first day of trade overnight when it comes to the international market. So we've seen a bit of a decline come in for the crude oil prices. So below 80 is how WTI is trading, and Brent has also come off the kind of highs that we saw yesterday. So 0.5% decline in the international market. But the big decline has come in for the gas prices. I mean, we did see near all-time highs in the last year. 7% of decline is what we are working with for the first day of 2023. Last year, that is 2022, we saw 28% of gains come in for the gas prices, but sharp declines is what you are seeing on the screens right now. This is because of weak industrial demand estimates, high production in US, high inventories in Europe. All of that really seems to be weighing onto the market. But the good moves continue in case of the metal prices. Still flat to marginally on the positive side here. Gold prices are trading at a 6-month high after posting the best quarter since 2020 in the previous quarter. We are looking at very strong gains continuing to the precious metals for this year.
Okay, all right. Thanks a lot for that, Manisha. Well, for the time being, we'll slip into a short break. When you come back, we've discussed a lot of stocks. We'll take that to Dipen Mehta of LXR Equities to get his view on some of those fundamental stock analysis. Later on, we'll also connect with Mr. Nitin Khara of Confidence Petroleum to understand the outlook for business in 2023, as well as the promoter entity has gone ahead and released some pledge on their holdings. Stay with us.
Back, it's time we analyze some of the cues and some of the news that our research team put on the table. And of course, today is perhaps the first serious trading day with all other markets open. So we want some good advice. And we have Dipen Mehta, Director at LXR Equities, joining us with just that. Good morning, Dipen. Thank you very much for joining us. Let me first of all wish you a fabulous 2023 to you and your dear ones. And shoot the first question. Very good numbers coming from all the smaller banks, and they've already had a fabulous 2023. So which banking sector, subsector would you prefer? Old private sector banks, we haven't concentrated much. Time to look at them?
Good morning, Lata, and thank you for having me on your show. And all the best for the new year as well. Season's greetings to you and the entire CNBC team. I think 2023 is going to be a fabulous year. And I think banks have to be the focus area for 2023 as well. I know that the old private sector banks have been a bit neglected, but generally they are conservative managements, not so much in the news. But I think the performance speaks for themselves. I saw the review which has come from the old private sector banks. I think very, very impressive. Valuations also are pretty attractive. They are generally in line with PSU banks trading at about 0.8 to 1.2 times price to book. And with the small size which they have the capacity and the capital to grow at about 20% plus for next 2-3 years or so if the environment is positive. So you could expect even a re-rating of the price to book multiple. So generally positive on old private sector banks, but that's true for almost all banks which are trading in the secondary market. I think they're all at attractive levels. All seem to be like secular growth stories. It's just that PSU banks may outperform because I think that there is still some way to go as far as re-rating of the valuation ratios are concerned.
Okay, Dipan, hi, good morning. What's happening at Zomato? Another big exit. This is the fourth big exit in a year. And while management reshuffles are common course of business, a spate of recent exits in such a short span of time is quite worrying for investors, right? What do you do with this stock now?
Yeah, Sonia, I think it's not a good development, but largely I think the business plans are playing out pretty well for the company. We saw record food deliveries during the new year. And on the whole, I think the food delivery business and the Blinkit business are shaping up pretty well. The company is following through on its strategy. It has a plan to get into the positive as far as its profits are concerned. And that plan is working out pretty well. So you could have a minor dip on account of this negative news flow. But it's a large company and they have a lot of talent in place. So I don't think it's going to impact the operations that much. On the whole, I think food delivery is becoming more and more mainstream. And that's, I think, very positive from the long-term prospects of Zomato. And the quarter in which I think it starts to break even, I think investors will start to re-rate the stock as well. So very positive on Zomato, but you need to have a really long-term view, 3 years, 5 years, and even beyond, because this company is going to be around for a long, long time. And food delivery business is not going to get disrupted anymore. And a great deal of consolidation also has taken place. So both the companies in the space will take advantage of this consolidation and gradually increase their yields.
Okay, all right, Dipan.
Dipan's sounding like one of those fathers whose children are repeatedly ordering on Zomato. And so he
That's what I meant, Lata,
believes.
that it's becoming so mainstream
I
that
agree.
the younger generation just lives off Zomato and Swiggy, I think.
Absolutely.
I don't know,
Yeah.
don't want to
You
operate
can
kitchens,
even
I think,
include
going
older
forward.
generation.
All right, so Dipan clearly sounding quite positive on Zomato, and it's likely to open up in the red as well. But if you have a 3 to 5 year view, as Dipan said, well, the stock looks pretty good. Dipan, what about these infra construction companies? Have you had a look at any of them? You have PSP projects. Well, they have got a rather large size order of around 1,300 crores. So we had a couple of chats in the past couple of months with ITD cementation as well. Infra seems to be moving on ground. Anything you like from that space?
Yeah, good morning, Nigel. Absolutely. I think that engineering construction companies are going to have a fabulous next 2-3 years or so. And companies like PSP projects, and I know you covered ITD cementation also, and that is one of our favorite companies within the sector. Disclosure that we and our clients are invested, like the corporate governance standards over there, and their project selection strategy. And then, of course, there's the big daddy Larsen and Toubro. I think it's been doing all the right things for the past 2-3 years in terms of improving the quality of its balance sheet and capital allocation policies, as well as trying to increase its return ratios. And all of this will start getting visible over the next 2-3 years or so. And considerable value and subsidies also being created as far as L&T is concerned. So one needs to have a decent allocation in the infra space, especially the infrastructure project development, rather the project execution companies. And L&T would be our top pick. I think it should be part of every core holding of every portfolio. And I think that next 2-3 years will be exceptionally good for this sector. And they have a good run. I think PSP projects also on a solid wicket, and this kind of order book position certainly gives a lot of visibility as far as earnings and profitability is concerned.
Let me just finish that. IRB Infra.
Well, I think that I don't track it as closely, and it's more to do as an operator rather than an actually engineering construction company. And we prefer engineering construction companies. I think there's better growth prospects there than actual companies executing the infra projects.
Okay.
Rather operating
Regardless,
the
it's
infra
at a,
projects.
no, okay. It's at a 52-week high, which is why I asked. Go ahead.
Okay, all right. Well, Deepan, request you to hang on. We're going to come back to you. For the time being, just invite our first management, Confidence Petroleum. That's the first corporate on the show. The company's promoter, well, they've released some pledge on the shares, closer on 40 lakh shares. That came late last evening. Now the pledge has come down. But to understand business, as well as how does the promoter holding move going ahead, well, we're joined by Mr. Nitin Khara, the chairman and chief managing director of the company, who joins in. Hi, Mr. Khara. Good morning and a happy new year first to you as well as your entire team. Talking about the holding first, you had disclosed yesterday that you'll have released some pledge on the promoter entity's holding, but I think it's still in that vicinity of around 15 to around 17%. So 2 points there. One, by when do you, look at in releasing further pledge, or is that an intent? And point number two, you have some warrants, I think, that are outstanding or preferential issue to promoter entity. Post-conversion, what does the holding go to?
Yeah, very good morning and wish you all a happy new year, Mr. Nigel, Lata madam and Sonia madam. Yes, we have placed now some quantum already we have released from that, and now I think by this month end we'll release the complete total quantum. It's a requirement for urgent requirement of little bit fund for our company. That's why we have placed that. But now it's a little bit quantity is still pending that we will remove by this month end. Secondly, our promoter holding after this warrant will be around 61%. Around, yes, it's around 61%.
Okay, why did you pledge your shares? What's the debt level? What was the debt level, say, a year ago, and what is it now?
Early, I think around 78 crore was there, and now it is around 35 crore. So almost 50% we have there. That's urgent requirement, as we have started our LPG import just recently.
Okay.
So that's why
I was coming to that. You had told us that you're going to start bottling plants. Have you added anything in this quarter itself? And if you can tell us the volume as of half year and what the volume will be by end of the year.
Yeah, Lata, we have added 3 more plants in this quarter, last quarter. Yes, Confidence is a total supermarket of LPG and CNG. In LPG, you are aware that we are in LPG cylinder manufacturing, where we are manufacturing and supply to all oil majors, and LPG bottling and marketing, where we have presently now 61 bottling plant. Earlier we are in 58 bottling plant, but now it's a 61 bottling plant. And third, auto LPG dispensing stations. Earlier it was 209, but 10 we have added in last quarter. So now it's 219, and another 50 are in pipeline, 50 to 80 are in pipeline, which we will complete by this financial year 2023.
So you
Yes.
told us that you had acquired a plant in Dahej as well. What's the capacity utilization at the Dahej plant, and what will it be at the end of this year?
Yeah, Sonia, as in last my interview, I told that there was little bit constraint in the due to price of the CNG prices. The demand of CNG cylinders are little bit lesser in this last quarter. But now, as prices are coming again reduced by the government, some government. So we are hoping that in this quarter we'll get the good orders again. But as far as capacity utilization, I can say we are utilizing 60% capacity of our whole 3 CNG cylinder manufacturing plant, which we are having in Dahej, Halol, and in Nagpur.
Can you just quantify for us how much demand has fallen? I ask because, a lot of companies like Maruti have also indicated that since CNG prices have gone up, demand has been on the muted side. Can you quantify from your end what has the fall been in terms of demand or volumes?
Demand-wise, as I told, no, it's a 40% downtime of the demand. overall CNG cylinder manufacturing. But as in second, we are in retail also, where we are getting the good growth of the this CNG retail. In Bangalore, we are developing 100 CNG stations. Out of that, already 11th are commissioned, and we are getting good response day by day. We are increasing our volume also in that CNG.
Okay, all right, Mr. Khara, let's get a couple of numbers then. You're adding capacity or focusing on the various verticals as well, but it's all about numbers ultimately, right? In the first half of the year, you've seen a growth of close to around 25% at around 820 crores odd. For the year, what kind of a number are you looking at in terms of a top line? And also give us a margin band. And what's the outlook for FY24 from here on? What are your targets? Go ahead, sir.
Right, Nigel. We are expecting around, in this year, we are expecting around 1,800 to 2,000 crore top line for the top line, including our last quarter. Fourth quarter is going on now. So we are expecting around 1,800 to 2,000 crore of the top line. In the, if you can say to 23-24, so in LPG cylinder manufacturing, the same demand will be there. In LPG, auto LPG, we are forecasting a growth of around 40%. That means presently we are selling 325,000 liter per day, which will go up to 425,000 to 450,000 liter per day in this 23-24, because the new stations are also coming up. So the growth will be around 40% in that field. In third, in pack cylinder division, presently this year we have sold averagely around 6,000 metric ton per month. So around 72,000 metric ton per annum, which we are targeting because some new bottling plant has also come and our new dealer network has also increased. Plus company has also gone for the direct B2C marketing. So we are expecting the growth of around 40 to 50% in that field also. Plus, the company has now directly started import of the LPG, and as LPG prices are very sustainable, economical, so we are hoping a good business in 23-24.
Okay.
And
so what you're saying is, in spite of muted demand, because you have expanded dealer networks and bottling plants, you are going to continue with a 25-30% revenue growth.
Right.
Okay. And margins, as Nigel asked you?
In auto LPG, we are operating margin around 15 to 18% going on, and in pack cylinder division, as 10 to 12% operating margins are there.
All right, we will let you go on that note. Thanks a lot for joining in. Dipan Mehta is still with us. Dipan, any thoughts on Confidence Petroleum and the stock price?
Sonia, sorry to disappoint. I don't track the company, but heard the management sounds very confident. We'll certainly start putting it on our watch list.
Okay.
Okay, that's good to hear. Okay. Well, Dipan, we have to take a quick break. We are going to come back. We will have the technical experts join us, but we have more questions for you. So do stay on with us. Back in a jiff.
Bazaar morning call. We're counting down to what is expected to be a slightly muted opening today. So down about 30 odd points. Sudarshan Sukhani and Mitesh Thakkar are joining in. Sudarshan, good morning. The pullback has been pretty okay so far. I mean, we're up about 400 points from the lows we saw in December. Do you think that can extend itself? And what is the order of the day?
Good morning, Sonia. See, the markets are choppy and a little uncertain. But the fact that the SGX is almost 100 points lower than yesterday's close, the Indian close, is not very conducive to a bullish view. So my point is that somewhere around 18,100, the Nifty finds support. If that support holds, we can expect at least a short-term run-up. We'll see how the month goes. But if 18,100 breaks, then I think we are not looking at a big up move in the near future in the next few days. We just have to either take short positions or step aside. So the view is 18,100 needs to be watched carefully. If it holds, try to take a long position. If it doesn't, do nothing.
Okay, all right. Noted that, Sudarshan. Hi, Mitesh. Morning. What about you? How are you viewing the index? Yesterday, we saw a good bounce in the lows. We're likely to open up in the red today. Would you buy the dip at some point of time?
Morning, Nigel. My understanding is that the index now has kind of defined the contours of a consolidation. 18,000 and 18,250, 260, I think that's the broad range which I'm looking at. So buying the dip may not be a very good idea, but yes, I think, overall the market hasn't resumed the downtrend which was there in the month of December. And I think this choppiness with mild pullback kind of a scene continues. So maybe around 18,060, if you can get a slightly bigger dip, then you would want to, venture into long with a target of 18,250 on the upside. But otherwise, it's a market which I would want to trade with more of stock-specific biases.
Okay, then that's our cue, right? What are the stock-specific names you're looking at, both on the buy and sell side? Mitesh, let me start with you.
Good morning, Sonia. I have a mix of buys and sells. Ashok Leyland, I think yesterday was in news and price-wise also gave a very good breakout. So buy here with a stop at 146 for targets of 155. And metals is a sector which has been buzzing. So today I've picked up Hindalco as a recommendation. On a mild dip, say around 1 or 2 points, buy around 485. Keep a stop at 478. Look for targets of 500. And on the selling side is Britannia with a stop at 43.30 for targets of 4205. And finally, a sell on Lalpath Labs. Keep a stop here at about 2240 and look for targets closer to about 2120.
Okay. Sudarshan, what would you trade specifically?
Good morning, Nata. See, it's a mix of buy and sells. When that happens, it really means that the markets are confusing and I'm not having a clear view. Asian Paints is an intraday short. Intraday short with a stop of 3090, 3090. Bharat Forge is a buying opportunity. You have to take this as a positional trade rather than an intraday trade. The trend is clearly up. Buy with a stop under 870. And Britannia for me also is a short sell. Mitesh talked about it. The same trade I have. Britannia is a short sell with a stop above 43.80. And finally, buy on dips opportunities coming in SBI cards. We can't take it for the day. Again, here we have to take a positional view, buy it with a stop under 790 and then hold on to it.
I somehow had a feeling that you all will have metal stocks. Sudarshan, anything? Tata Steel, Hindalco, all of them had a roaring Monday.
They had a roaring Monday, but because today is subdued and metals are the first to be punished, it was I thought it was better not to venture there.
Venture there, okay.
Okay, well, thanks, gentlemen, for that. Let's also get some F&O cues out of the way then. Chandan Taparia joins in. Chandan, good morning. What are you looking at on the F&O side and what are the stocks to watch?
Good morning, Sonia. Thanks for having me. We have seen some consolidation in the market in that the declines were being bought, but due to the call writing, upside is being restricted. Recently, we have seen good run-up from 17,777 and now market is finding hurdle near to key moving averages. We believe that some sort of consolidation could be there where decline could be bought and absence of follow-up is likely to be there. So we believe that any declines towards 18,081, which is the immediate support from last few days, can be bought with support of 18,018, and we are looking for an uptick towards 18,181 to 18,250. So likely to trade in a 18,000 to 18,250 zone. And even if I look at the option chain, the put writing is visible at 18,000 strike and call writing is intact at 18,200. If I look at the data setup, put call ratio is 1.02, VIX is below 15. That is also giving some sort of range bound bias where decline could be bought, but follow up is likely to missing in the market. Now, if I talk about the bank nifty, it is forming a narrow range inside bar from 2 consecutive days, and it need to now take support near to 42,700 to 42,800, and that is going to decide the next leg of rally in the bank nifty. Now, looking at the stock wise, first it is buy on REC Limited. We have seen good momentum in most of these power finance companies, including REC, PFC, and REC has seen the good rollover of around 90% in the last series. At the beginning of this series, in last 2 days, we have seen 10% long built up, which clearly indicates consolidation, breakout, and fresh trigger to the counter. So recommending to buy with a stop loss of 117, and here we can see a target towards 126. Second trading idea, that is from the auto pick, buy on Ashok Leyland. This stock has negated at lower highs, lower lows on the daily and the weekly, and surpasses falling supply trend line. 91% rollover with better roll cost, indicating that now positive bias could turn to the counter. Even we have seen a crossover of 50-day exponential moving average that also adds the positive strength in the counter. So recommending to buy with a stop loss of 145. Here we have a target towards 155. Last trading idea, that is buy on metal. We have seen good process in most of the metal name, and RRG relative rotation graph is indicating strength. However, due to the weakness in the global market, some dip could be seen, but that could be bought smartly looking at the nature of the metal name. So recommending to buy Hindalco on decline with support of 475, can look for a bounce towards 505 to 510 in this stock.
Okay, Chandan, thanks a lot for that. Appreciate your thoughts. Let's slip into a quick break. We'll come back with the pre-opening rates. We'll also have Aditya Velekar of Axis Securities to discuss the key trends as well for 20.